Hey there, this is Brendan Stoneman with Remax Kelowna, and I'm talking to financial advisor Tom Gaymer. All right, so in a previous video we talked about the creditor protection / mortgage life insurance and the pros and cons that go along with that product, but there is an alternative, and that's personally owned life insurance. So let's maybe chat about that, where someone would come to you to talk about their life insurance options.
Sure. So the first thing we're going to do is assess somebody's insurance need. Last thing you want somebody to do is pay for insurance that they don't actually need.
Right.
There's no point, okay? So we're going to ask a series of questions in relation to that, and one of the big ones is going to be, what's your current debt load? What's your mortgage amount?
Right.
We're going to look at that, get an understanding of what someone's amortization period is, and then get an understanding of what sort of insurance that we should recommend.
Okay.
Okay?
Yeah, makes sense.
What we then do is we're going to assess somebody up front. We're going to ask them a series of medical questions, which we are licensed to do. That's the other thing, is credit protection you don't have to be licensed for.
Okay.
And then we're actually going to send that to our underwriting department, who are actually going to go over that. They're going to look at medical records if they need to. Mm-hmm. They may do blood profile, they may do a urine analysis, something like that.
Yeah.
And they're going to assess whether or not you should have insurance.
Right. So then all of the, in comparison to the creditor insurance, where they start doing that after you die, you guys do that up front, so you know that once you have your coverage, you have your coverage.
You have your coverage, other than in an act of fraud, where you've clearly lied about something.
Right.
You have coverage and it's there, and you know that if something happens,
Mm-hmm.
your loved ones are going to get protected.
Mm-hmm. So the creditor protection, in theory, if you die and everything goes well, which sounds silly to say, but the mortgage gets paid out.
Yep.
With personally owned life insurance, then you pass away, what happens to that money?
Sure, then the beneficiaries are going to receive a lump sum, which they can then choose what they do with.
Okay.
Okay. So one thing I'd ask you right now is, what do you think about interest rates?
They're pretty low.
Pretty low.
Yeah.
I'm probably not going to advise somebody to instantly pay off all of their mortgage if they're paying like 2.5%.
Right.
You're in an extraordinarily low interest rate environment. You want freedom of choice.
Yeah.
With mortgage insurance, you don't get that.
Right. Well, it's nice to know that you can take that and do what you need with it, which maybe pay off the mortgage, maybe do investments, maybe something entirely different. So
Exactly.
Nice to have the choice for sure.
Definitely.
So a couple more questions then. If, what's the transferability of the insurance product? So, you sell that property and go buy something else. I know with the creditor insurance, you would then kind of start over.
Sure.
With a new insurance policy. Here, that's not the case then?
Freestanding life insurance is tied to you, not the property.
Right.
You take it with you wherever you go.
Yeah, awesome. So if it's more secure coverage, better coverage in that sense, you got more freedom and control, like where does it measure up cost-wise compared to the other mortgage insurance?
Sure. Much more benefits, much cheaper cost.
So it's cheaper too?
Typically, it's considerably cheaper.
Amazing.
Yeah.
Cool. Well, give Tom a call if you've got any life insurance questions, and he'll take good care of you.